Yo, what's up, guys? So I wanted to make a quick video about uh, basically what I'm seeing this week. Kind of give you all like a review type of thing that I give my mentorship students in our little community. So yeah, basically where we're gonna want to start, of course, is gonna be right here, right? This is basically where everybody should start, right? For those of you that aren't aware. First thing you want to notice, obviously, there is a bank holiday on Monday. So Monday and Tuesday for me are going to be out of the question because, as ICT says, high probability on these kind of days, they're non-existent. Yes, some moves happen, but it's just not consistent. Okay, whether you want to believe it or not, you can go do your own back testing or get your own experience with that and come to your own conclusions. But that's just my view, right? And ICT's, obviously, because that's the source, right? And then, of course, the day after, it's also not something you want to frame as high probability either, just because the holiday volume, right? Things are basically primed to get manipulated the day after because think about it, people are celebrating, doing this and that on the holiday. They come back, they're easily, you think about it, they're easily taken advantage of, right? Which you can imagine. It's not hard to see that, right? So Monday and Tuesday will be quiet for me. Um, just going to be like a spectating ordeal. And then, of course, Wednesday to Friday, we may see some things pop off. We do have a Fed meeting, right? The speech, you know, things are going to be wild because of the stuff that's being talked about, interest rates and inflation and all that stuff. Excuse me, but yeah, that's something you're going to want to monitor, kind of study and see what's going on. And then, of course, we have a bunch of FOMC speeches coming as well, right? So, not a week to pressure luck. If, when things like this are happening, FOMC or speeches and stuff, you want to be very careful. Okay, doesn't mean you can't trade. Doesn't mean setups aren't going to be there. Ideally, you want to grow into the acceptance of not having to take a trade every day. You gotta trust that things repeat constantly. My YouTube channel and just ICT himself and all those other students that showcase their abilities basically prove to you just how consistent and how often things repeat. So there's no reason to feel like you're rushed or in a hurry. I understand there's like people taking challenges and stuff like that, but the easiest way for you to lose a challenge is to be in a rush. You know what I mean? It could be one day that can get you, half of the challenge completed, right? Not that you want to lean on that, but that's a possibility. With that being a possibility, right? You have no reason to rush, especially if you have proven to yourself that you're consistent, right? Where you can at least find the setups consistently and have, shown a track record to yourself, right? Doing back testing and maybe, preferably 6 months to a year of consistency in a demo before you try to even take on that challenge, right? But yeah, with that being said, like I said, the first 2 days, I'm going to just be observing. And of course, the next days after that, Wednesday through Friday, we're going to be paying attention to the F1C announcements as well as the speech. Okay, so that's where our focus is going to be from Wednesday to Friday. All right, so yeah, so with that being said, let's move on to my next analysis. So, being that it's the beginning of the month and we're moving into a new quarter on the 16th of September, which is going to be quarter 4, right? We want to observe what the interest rate markets are doing because, as most of you guys know, the interest rate markets they basically drive the marketplace, right? Especially currencies. Wherever the interest rate market for this specific currency is headed, a lot of times that currency is going to follow that interest rate market. Okay, like for example, the 10-year yield, right, or the bond yield market. This is the market that influences the DXY, right? It influences them, or it influences the DXY's movement. So if this is rallying, a lot of times the DXY is gonna follow what this is doing. Okay. Just a refresher on, risk off scenarios as well. You want to keep this in mind always because this is very important to understand the overall market condition so you can be in sync. You know what I mean? These other two are, basically it's the interest rate markets as well, but these are just reverse correlated to this one. And so, yeah, so if this is rallying and these two are going down, that signals a fundamental interest rate, like a fundamental piece of information leaning towards a bullish DXY. If this is rallying and these two are bearish, and then vice versa, if this is bearish and these two are going bullish, that's going to signal a bearish DXY, or it's going to give you another confirmation, right? You don't just look at these and then automatically go in and make that decision. You got to layer certain things on top of each other, okay? But yeah, as you can see, this one's rallying. I see this order block here, so this high is basically in our targets, right? It is pulling up into a premium, and seasonality for the DXY is actually bearish, which we will get into. But yeah, as you can see, there's this high up here, right? We're going to monitor what happens at this order block here. We did come from a weekly fair value gap, pushing us up into a premium. So what happens at this order block and this fair value gap, right? These two areas, it's going to basically determine, my faith in a bullish or bearish condition, right? Hopefully, we can see this follow suit and basically hit this and, potentially give us a rally, or it would be acceptable for it to come down maybe into this fair value gap, and then potentially make a move higher, right? As you can see, this fair value gap's in an optimal trade entry area, but if this here breaks, that's going to be basically indicative of this low and lower prices being attacked. We have this gap down here as well, so if bearishness occurs, right, that's going to be a potential candidate for a targeting area. But for now, I'm leaning towards more of a, we come back down into here, there's a gap right here as well, so I'm leaning towards the fact that this is going to come down here and then potentially rally higher to attack this high, and these should reverse correlate to that to give us a strong bullish interest rate market analysis, which will correlate to the DXY being bullish, as long as this one follows suit and these two reverse correlate to this market here. All right, so I hope that made sense. But with that being said, let's move on to the DXY. Okay, let's start on the monthly time frame. Okay, let me pull up this stuff. Okay, let me take this eyeball out. Yeah, so as we can see, we're at this fair value gap. It didn't quite punch all the way. I mean, it did actually punch through. Let's see. Yeah, it did punch through. We did call 110 last week, and I'm not going to sit here and go pull up all the piece of information proving it, because I already sent it everywhere. In Telegram, I even showed it on video as on YouTube that I posted previously, and I also posted it on my Instagram channel or Instagram page. So make sure you go check that out if you haven't. But yeah, in terms of what we're seeing here, right, what the interest rates are showing us, the interest rate markets leaning towards potential bullishness for the DXY. I can see there's a fair value gap above here. Being that we are so overly extended, it would not be a surprise for DXY to potentially head lower. And being that it's also the start of the month, consider thinking of Power 3. If we're going to be bullish in the month, and Power 3 spreads out through all time frames, right, including the higher time frames, that manipulation lower to maybe come and rebalance some of this stuff here, that would be logical in my eyes, right, for us to maybe come down lower, right, give a false sense of resistance, right, there's a high, get retail thinking, oh, resistance, 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 right, and then potentially coming down, rebalancing this a little bit, and then possibly heading higher to come and attack this, as well as potentially attacking these equal highs at a later time. We do have these consecutive up candles, so that's going to be something of interest as well if we do get up into that area, right? Consecutive up candles. Yeah, right. So since we're so far away from it, right, we're just going to consider what's going to happen up in this area. So I'm thinking that we're probably most likely will drop down lower if we're going to be bullish. Okay, we have to see how things transpire. It is the beginning of the month, so we're going to want to see a little bit more information to have a concrete direction. But again, I'm leaning towards bullishness with the idea that we may be bearish short term to come back down and rebalance some of this, and then potentially head higher. Why am I leaning towards bullishness? Well, interest rate markets are looking bullish, right? They're looking like things could go higher. We also have economic news talking about America's going to continue to increase interest rates, which is bullish for the DXY. And yeah, right? So those are big time factors in us making a decision here, okay? That doesn't mean, like I said, that this can't pull back lower and rebalance some of this price action in here to then potentially give us a run higher. So with the, like I said, with it being the beginning of the month, we can definitely consider, manipulation lower, thinking of power 3 from the monthly open, right? Getting us down into some form of a discount because this is so extended, and then potentially looking for a higher price level, right? But like I said, this 110 level, that's a significant level that we called last week. And there is still some of the fair value gap that is still left that could be potentially looked to be filled. Okay, so with that being said, let's go down to the weekly chart. Let me fix the chart a little bit. There you go. But yeah, so as you guys can see here, let me see if I can get this to, okay, there we go. As you guys can see, right, we just ran this high. So what was price doing? Price was reaching for liquidity, or reaching for this key level here, this significant key level. Since we just took buy side liquidity, it would be very reasonable for us to think, okay, price is probably going to try to retrace. It's going to rebalance something to create power 3, right, for bullishness, right? Because power 3, if we're bullish at the open price, it's going to dip lower. It's going to dip lower. It could dip lower, right? Give us a like a false decline, coming back to do what? To rebalance or reach into these consecutive down candles here, which is a weekly order block, right? I also have this candle down here as well. I'm going to choose to stick with this one for the time being, because if we get below this, right, and it attacks this weekly low and this weekly low, there's a fair value gap here with an order block. So that would be ideal as well if price wants to come back lower to then potentially rally higher. Of course, like I said, on the basis of rising interest rates and that being a bullish fundamental driver in the DXY price action, okay? But you can see what has happened over the past year and even from last year, right? With the talks of rising interest rates, okay? It's bullish, obviously, right? And until this low is broken, I would not be considering any type of longer-term bearishness. Although we are bullish, does that mean that this pullback lower, if it does look like that's what's going to happen, does that mean that I'm not going to be able to participate in any type of bearishness? No, that just means I have to frame my stuff in a contrarian fashion, right? Have smaller targets and just be kind of frugal with what I'm doing, lower risk, etc., right? Follow rules, right? So we don't get hurt. But yeah, right? There's a whole lesson I can go into about contrarian trading and how you can frame stuff like that as well, but maybe I'll get into that another time, right? But anyways, like I said, from here, we're at a nice level where a reaction could take place in terms of downside movement. Why would it be going downside, or why would it be going to the sell side? Because there's sell side liquidity. They'll probably pull down, rebalance this, potentially attack these lows here, and then potentially rally higher, especially if the interest rate markets are going to show us that that order block we talked about here is going to be respected, okay? You can also consider this level as well. These consecutive down candles here, draw a line out. It's basically right underneath, so it's permitted if it wants to sweep down below this and maybe take that. There's a gap here as well, right? So anywhere in this area from this high or this order block down to the close of this gap, that's where I'm going to anticipate potentially a bounce in this market, which would lead to a potential bounce here, right? With a similar action occurring. Retrace lower, come back and rebalance into a discount, and then you can see potentially some bullish price action, right? Okay, so from this low to that high, this is equilibrium. Okay, actually it's all the way to the top, so this is equilibrium. Right, it doesn't have to come down to the 62. You know, it can even react from in here too, because this is a fair value gap in there as well. Plus, like I said, this is a weekly order block. Okay, so we're just gonna have to see what occurs, right? So if I was gonna sell, right, if I saw, you know, it's okay, we took buy side liquidity, maybe on the lower time frames, I see, oh, okay, it's Monday, right? If there was no holiday, we could see, okay, well, I could probably frame a sell from up here to probably target down here one of these PD arrays, right? That's like a simple explanation of contrarian trading from one PD array to the next, right? Within a price line, right? Like I said, we can get into that another time. But yeah, so I hope that makes sense, right? Let's go to a daily chart. Exactly what is occurring here in concert with what we just spoke about, right? So price is punched up into this, right? As we've been talking about, we see that there is a multi-time frame confluence in terms of this fair value gap. So there is a weekly fair value gap with a daily fair value gap within it, okay? Which was pushed in once and then it rallied after that, right? Just to come up here and hit this, which was, this whole thing here was framed out, right? And, you know, like I said, I posted a lot about it in the past week, so, or 2 weeks essentially. So definitely go do some homework on that and kind of see what I was saying and watch some of the previous videos as well. Okay. But like I said, right, price rallied up here, right? It would be permissible for us to see price maybe pull back down lower into some form of a discount, right? Into this PD right here, or this discount array, the fair value gap. It's pretty highly likely because there's multi-confluence, and like I said, the interest rates, there's nothing saying bearishness for the interest rates, right? And as it says here, right, this low is broken. Anywhere from this area to this low, if that is punched into, I'm going to consider potentially lower prices. Absolutely considering lower prices if this gets ran here, because that's a definite break in market structure. Okay, there's two fractal structures here as well, so if both those break, that could be considered as well. There would just have to be, you know, a monitor scenario if, you know, we got down into this level, just to see what would occur there. But yeah, right. So as I say here as well, seasonality for DXY is bearish, right? And we can go take a look at that in my journal, so I can give y'all a view on that. Actually, I think I'll just pull up this. Alright, so extend this over. Alright, so as we can see, right, this is, okay, let me put Nasdaq, okay. As you can see, Nasdaq in September, there's a pretty significant bullish seasonal tendency, okay? So, you know, we can see that that's present, right? So that's something to consider. There's also a high that gets created in September, followed by some bearishness, right? So this here could be significant in terms of what we see in the price action for the indices, right? We also see September for the DXY on two of the lines, they're bullish, okay? And there's also, you know, going into October, there's some form of bearishness that is present here as well from a seasonal perspective, right? So with that being said, right, we want to monitor and see if our analysis is going to be complemented by this, okay? Like if we have obvious reasons to be bullish in the DXY, which is what we're kind of leaning towards seeing, and then, you know, potential bearishness in Nasdaq, which is also what I am potentially aiming to see, that would basically confirm the seasonal tendency is in effect, okay? So that's something to monitor as well. So like I said at the beginning, or I think I said this in the beginning, basically I'm walking you guys through my monthly analysis, okay, and how I come to an understanding of what it is that I'm going to be anticipating throughout the month, Okay, and as I said, my students get this every single month. Most times, every Sunday, we touch on this type of stuff. So, but yeah, with that out the way, let's go back to the chart. Okay, so I hope that makes sense for the interest rates, the interest rate market, how that affects the DXY. I hope this DXY analysis makes sense. I'm bullish, right? What are these two lines up here? Okay, what are these two lines indicating? That is the fair value gap that we looked at on the weekly and monthly chart. Okay, so price failed to get up inside that. So that is my next draw on liquidity. Being that we are overextended, right? It wouldn't be surprising if we potentially have a sell-off into this area that could last all week, or it could just punch down really fast and then start heading up with all the crazy news that we're going to see this week. Okay, so we're just going to have to monitor it. But overall, overall view, I'm essentially bullish for DXY, and I named all the reasons why. Okay, so that's what we'll be monitoring. Here's our invalidation level, as I said, and yeah, so I hope that makes sense. I hope it's clear in terms of what I'm looking for here. Right, so with that being said, let's actually move over to the indices. Okay, so we can see, so let's go to the weekly chart. Okay, so I want you guys to look at this for a couple seconds, a couple minutes, not minutes, but a couple seconds, okay? Tell me what you see, right? Here's a hint, right? Keep your eyes on any obvious equal highs or equal lows, okay? We'll take a minute to just look real quick before I throw this stuff up. All right, so now I'm going to throw up the annotations. All right, and if you didn't get it, right, if you see something and you didn't get it and I have it marked, don't feel discouraged. It is what it is. I've been doing this for a while now, so I have a grip on what I'm looking for and a decent amount of experience in the markets already. So if you caught these equal lows down here, right? That is beautiful, because that's not random. Okay, it stopped right before it took out these equal lows over here on the weekly chart. That is significant. What did price do here? Okay, what do you see? Price rallied higher, took buy side liquidity. Okay, rallied higher into a premium price level. Here's consecutive up candles. Okay, so that is a bearish order block. Also, it's at the 62% retracement level, which is the monthly optimal trade entry, also showing on the weekly, right? And just like ICT says, price likes to take liquidity and push into a premium before it sells off, right? Or push down through a low into a discount before it ends up buying. Okay, so being that it is the beginning of the month, okay, this level here is what I'm going to be looking for the monthly target, I guess you could say. So the monthly target is going to be, let's say, 11,000. Okay, and we're going to see if we can get down there, right? So, and of course, there's other things here we're going to talk about in a second. But yeah, I just want to make sure you guys see this is an obvious level. Where is another obvious level? Well, the next obvious level would be potentially these equal highs here. Okay, so that's something that I didn't mark up, which I don't know why I forgot, but hey, we're not up there yet, so it's not important, right? This is what's important right now, until we get a little closer to that, but this is good to keep your eyes on, right? And be aware that it's there, just in case something like this, or your analysis fails, or whatever the case may be, right? So you can pivot and adjust properly. Okay, but I hope that makes sense there. Okay, why would this be important? Because it's bearish already. Okay, seasonality has a seasonal tendency right now going into September of possible bearishness, heavy bearishness in Nasdaq. Interest rate markets are looking like they're trying to rally. Okay, the bond yield, which is what the DXY follows, which is right here. Okay, These two are reverse correlating with this, signaling us a potential bearish or a potential bullish DXY, which in turn would result in a bearish overall indice market. Okay, so with that being said, that is why these lows are significant to me. Okay, and that's why these are going to be my target as we go into September. Okay, so now dropping to the daily chart. Okay, all right, so you can see it's pretty busy here. Okay, it's got a decent amount of busyness happening right here. All right, but as you can see, here's our monthly equal lows that we were just looking at, or weekly, monthly equal lows. Okay, they're chilling there. 11,000 is going to be where my monthly target's going to be. Okay, I'm not a swing trader or anything like that. I just day trade. Anywhere from 50 to 100 points. It's kind of my targeting method, I guess you could say. Of course, partials along the way as well, but I like marking off potential areas that make sense, and this makes total sense. Okay, why does that make sense? Because of all the bearish signals that we just talked about. Okay, things leaning towards bearishness, and it makes sense. And these just are clean lows. Okay, in an overall bearish market, right? They'll basically rally into a premium to then sell off aggressively here, right? So, yeah. So, first thing you want to pay attention to is where do we come from? Okay, well, what has been happening the past 2 weeks? Well, price over here fell lower, shift in market structure. Okay, break in market structure. Okay, so broke through these two lows. Right, that's significant. That's showing, okay, price has a strong willingness to go lower. DXY ended up rallying, so that validates this as our breaking market structure, right? What did it do? Right over here, as it was breaking through this and gave us our breaking market structure to change this trend. Okay, what did it do? It opened on Sunday, rallied up. Okay, this was, I believe, a Wednesday where it created the high, or this was a Thursday and Friday. This was also called as well. If you scroll back on our Telegram, or just like maybe look at some of the videos as well that I posted from not last week but the week before that. Okay, or even go into the Telegram and just scroll up and look. There's a lot of things that I post, but at the same time, you'll see that it's there. I post this type of stuff all the time, and our mentorship community definitely knows, because we were actually a part of this. Okay, so what did it do? It rallied up to a premium from Sunday. Okay, rallied up, gave a Judas swing, shifted market structure, breaking market structure, returned to a fair value gap after buy side liquidity was taken at a premium. Okay, also had this gap there. Okay, which was respected. Right, we had our eyes on there, and then of course, as you see, boom, it fell off. Right, with all the news and stuff that also came out. I believe this was some form of a speech. I think it was. This was Powell's 8-minute speech that basically lost investors like $78 million, something like that. I saw some headlines talking about it. But yeah, so this right here is actually, if you picked up on it, this is actually the YouTube model here that everyone's learning. Okay, took buy side liquidity, shifted market structure, left fair value gap, breaking market structure as an addition, right? And then came back, refilled this, pushed into a premium, and then sold off. So daily fair value gap fill would have been this framework for this on the daily chart. Okay, and then what did it do? It broke down below this low here. So what is this, right? From this low to this high, this gap in here, being that price already took off, and here's the model, any return back to this fair value gap is another daily fair value gap fill, which this is classified as institutional order flow entry drill here. Okay, which you guys will learn about, because I think he said he's going to teach it to the public. So it is what it is. But yeah, so price pulled up higher, right? Hit that, and then ended up continuing to fall off. Another swing low ends up getting broken, and this low gets taken, which is also a target that we had from last week as well in our mentorship community. Okay, but yeah, so being that we are where we're at right now, right? Price has basically been really aggressive. So what am I anticipating, right? So we have our monthly range high here and our monthly range low. Okay, here's our discount. So price is in a discount on the monthly, and then upper, this upper premium over here on the monthly chart, right? That's going to be what I'm trying to aim for, right? I want to see price from right now, rally up from taking this low, okay, give us a retracement into potentially, this optimal trade entry area or this weekly fair value gap area, aiming for this high, right? I want to see that high get taken out of the marketplace before we end up aiming for lower prices potentially, okay? We are at this order block here as well. This is another chance to touch on contrarian trading. If we're in a bearish market and price hits a discount array, and there's a possibility of a retracement, that's how you can also frame a buy setup in a bearish market, because we're at a discount array that we could reasonably expect some type of bounce from to then hit a rebalancing point, right, or attack some form of liquidity in form of a high or fair value gap or whatever the case may be, to get us into a premium or back to equilibrium from this high to this low. And then that can be essentially where our high of the week may form, or that can be basically where we could frame possible entries, right? In the context of course, this daily chart, we would chop it up and go down to the lower time frames and stuff to better our framework and stuff like that. But just from this time frame, you can kind of see, okay, it took sell side liquidity, right? Basically, I'm anticipating this fair value gap or this order block to be pushed into, because I want to see price get back into a premium, take some form of buy side liquidity, and then potentially aim for the rest of the liquidity down here. There's a bunch of liquidity here, equal lows here. And not only that, we have monthly equal lows down there as well that look like they are primed and ready to be smashed. Okay, we just took liquidity out of the marketplace up here a couple weeks ago, so I'm not really too concerned until maybe this high gets broken. If this high gets broken, that's going to basically tell me that we're potentially going to reach for these highs. This is when my sell interest overall or bearish bias would be invalidated, because then that would mean we're taking out highs and we're breaking premium arrays, which is going to signal basically some type of bullishness. Okay, so this is a premium array up here, the order block and a fair value gap. So this would invalidate, just to review that, right, so it makes sense. If highs get broken and then this bearish fair value gap gets broken and then this bearish order block gets broken, right, or pierces through the midpoint, okay, that's going to be a bullish sign, because now these bearish points of interest are not holding price. And in the bearish market, we want to see these areas hold price, right? Not so much this high, because I'm looking for that to be swept into this fair value gap to rebalance this, okay, to then reach for the sell side liquidity if it decides to do so. Also, if you notice, this is the monthly open price, because this is September 1st here. So essentially, I'm looking at this as my reference for the monthly power 3. Okay, so what would that look like? That would look like, okay, here's the open price. Potentially can get us above that, right? Because if you guys understand power 3, getting above this kind of reference point, an open price, based on the time frame I'm looking at, which is monthly, for the monthly power 3, anything above that is going to be a potential candidate for framing sells. Anything below, if we're bullish, would be potentially framing buys. Okay, so right now we're below that area. We're below the monthly open at a bullish point of interest where we could potentially anticipate some form of bounce. You get what I'm saying? So yeah, so I'm basically leaning towards, for indices, all this in a nutshell, I'm leaning towards price retracing back up into here, potentially filling this fair value gap, or tapping into it at least, taking the buy side liquidity, getting us to a premium price level, not only from this high to this low, right, in that range, but also if we get above this high here, we're going to also be in the monthly premium levels as well. So there's confluence in terms of the two ranges that we're working within. Okay, so I hope that makes sense here. All right. And if that went over your head, just ask me some questions and I'd be glad to help you out and try to get you to, get some clarity on some of this stuff. Because it's really not as hard as it seems. Okay, you just got to know what the hell you're looking at and, have some experience and see it done over and over again. Okay, and then things will start to click, I promise you. But yeah, so I hope that makes sense. Oh, we also have a gap down here as well. this could potentially act as support, right? And then, maybe give us some stutter effect in there potentially. Just something that I'm going to be looking at. It's not too much of importance for me right now until we get down into there, because then I'll be monitoring exactly what it is that we want to do. Like I said, we have these equal lows, so I hope it's understood in terms of why my idea, or the direction I'm leaning towards, is bearish for indices, being that we have the interest rates potentially on our side for them going bullish, which is a bearish sign for indices. The interest rates being bullish is a bullish sign for DXY, the bond yields specifically. Okay, these two are supposed to be reverse correlated to this one because DXY follows this one. Okay, and then of course we see our logical areas for the DXY. Okay, if it pulls down, sweeps this low, if that happens, right? If that's like what looks like it's gonna happen, this, it looks really familiar, right? It looks like it's flipped upside down for the DXY, right? So that would be this high being attacked. Okay, so that's kind of like the view I have for this week. Like I said, I hope that made sense. I hope it didn't go over most of your guys' head, some of the things. And of course, if it did, I'm always here to help. And then we also offer like one-on-one services if that's something you guys would be interested in. Just want to throw that in there. But yeah, if you guys haven't already, definitely follow our free resources, our Telegram channel, and then follow our social medias as well. I'm always looking for different ways to help you guys. I did run a poll recently, so we will be touching on market maker models, frameworks, as well as psychology, risk management, and there's one more of a thing too, but I can't remember exactly what the topic was. It'll come to me later. But yeah, guys, like I said, definitely leave some comments down below in the comment section. And yeah, I hope you guys have a safe week. Just let me know if you need anything. I'm always here to help, okay? So with that being said, you guys, I hope you have a wonderful week, right? Be safe. There's a lot of things happening news-wise. And yeah, I will see y'all on the next one. Take care.